Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll discuss one question on profit reconciliation statement where cost book as well as financial book shows losses. Let us read the question from the following. Prepare a statement of reconciliation and find out profit or loss as per financial records. Net loss as per cost record 1,72,400. This will be starting point of our profit reconciliation statement. Works overheads under recovered in costing. Administration overheads over recovered in costing. Depreciation in financial account. Depreciation in cost book. Interest received. This is an item of income. Obsolescence loss in financial account. This is loss which is not a normal, you can say abnormal loss. Provision for income tax. This is recorded only in financial book. Opening stock, financial records as per cost records. Closing stock as per financial record, as per cost record is given. Interest charges in cost account only. Preliminary expenses written off. This is recorded in financial book and this is only in cost account. We have gone through the sum. Let us see the difference in items of expenses and incomes in both the books. Working notes are prepared in this fashion. First column is particulars. There are two amount column, cost book and financial book. We are going to start our profit reconciliation statement with loss as per cost book, which is given in the question. Therefore, first amount column will be cost book and the second will be financial book. Last column will give us sign plus and minus. Accordingly, we will be preparing profit reconciliation statement. Works overheads under recovered in costing 3120. So it is under recovered 3120 in cost book. So in financial book it is taken more 3120. We'll put 3120 in financial book, indicating that whatever works overheads absorbed in cost book, in financial book they are more by 3120. Administration overheads over recovered in costing 1700. Administration overheads are over recovered in costing. Administration overheads are over recovered in cost book. That means they are shown more by 1700 in cost book. So we'll put 1700 in cost book. In financial book there will not be any amount. It indicates that whatever amount of administration overheads actually paid in financial book, in cost book they are taken more by 1700. Depreciation in financial book 11,200, in cost book 12,500. Interest received, it's an item of income, 8,750. This is recorded only in financial book. It will not be recorded in cost book. Absolute loss in financial account 5,700. Opening stock in financial record 52,600. In cost record 54,000. Opening stock have effect of expense. Closing stock in financial record 52,000, in cost book 49,600. Closing stock have effect of income. Interest charges in cost account 6,000. Preliminary expenses written off 950. This will be recorded only in financial book. So we have recorded all items of expenses and income. Now from amount of first column, we should deduct amount in second column. 0 minus 3120. So it will be minus 3120. 1700 minus 0. So it will be plus 1700. Depreciation 12,500 minus 11,200 plus 1,300. 0 minus 5,700 minus 5,700. Opening stock 54,000 minus 52,600 plus 1,400. Interest 6,000 minus nil, so it will be plus 6,000. Preliminary expenses 0 minus 950, so it will be minus 950. Now let us think of income. Interest received 0 minus 8750. It should be 8750 minus, but as it is income, we are required to take reverse sign. So it will be plus. Closing stock 49,600 minus 52,000. It is minus 2,400, but we are required to take plus 2,400. We have to start with net loss as per cost record 1,72,400. As this is a loss, we'll put this figure in bracket. To this we are required to add the items as per working note. Administration overheads 1,700. Depreciation 1,300. Opening stock 1,400. Interest 6,000. Interest received 8750. Closing stock 2,400. Works overheads minus 3,120. Absolute loss 5,700. Preliminary expense written off 950. Net loss as per cost book 1,72,400. We have taken subtotal of this, it comes 21,550. If we deduct this, we get negative 1,50,850. We have taken subtotal of these negative figures, comes to 9,770. Now this will be added, so final loss as per financial book is 1,60,620. In this question, we have seen a profit reconciliation statement where both the books of accounts, financial book as well as cost book, is showing the loss. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.